Hey guys, Young here. So today I'd like to share with you guys a piece of news that just came by to me, and the news basically is okay. Anyway, do you buy the Hong Kong market now? Right now, I'm specifically looking at the China/Hong Kong market. Do you buy it right now? And before I continue further, I'd just like to do a quick shout out that I'm actually having a 60 to 90 minutes webinar on price action, all right, trading price action. So what you can expect from this webinar is that it's 100% free. That's first and foremost, 100% free. Now next is that I'm going to share with you guys how to choose the right time frame to invest, how to correctly draw support and resistance line, six to around 6 to 7 common rebound patterns that you should look out for that to time your entry, and last but not least, a bonus. All right, so if you're keen in actually joining me in this webinar, which will be posted up soon, the exact details will be posted up soon, go to this registration link over here, and it will redirect you to an Eventbrite link. There is no physical event. I'm actually using this because they provide free emails, allow me to email you guys without paying additional money. I don't have to use MailChimp or all this kind of stuff. All right, so if you guys are keen in joining me in this 60 minutes price action webinar, please go over to this website right now, bit.ly/2IBM3BR to register your details right now. All right. So today, what happened was that surprisingly, Hong Kong's leader actually pulled out withdraw the extradition bill and set up platforms to look into key cause of protest crisis. So with that said, Hong Kong market actually rallied really high. The Hang Seng Index went up. I think it was like 995 points, right? Almost $1,000 Hong Kong dollars up today, and I'm feeling very good because I am, as you guys should all know, that I'm actually invested in Hong Kong, all the Hong Kong banks, right? So I'm actually feeling really good over here today. Today is I'm in a world of happiness, right? Not world of pain, but world of happiness. I've been telling people around me, look at these banks. Because of riots, they're falling so cheap. So do something about it, right? Do something about it. All right. So anyway, today I'd like to focus specifically on China stocks, and this is just one stock which I think I'm going to go through a couple of stocks, but this is one stock which I think will really benefit you guys, and it's really cheap because some of you guys has been asking me, hey Yongik, what stock is actually I can actually buy for a very low amount of money if I'm starting out, like maybe I got $5,000 USD. What are some stocks that I can actually look at and buy these stocks, right? So one of it is Tencent Music. Tencent Music is owned by Tencent Holdings, the largest Southeast Asia company in Southeast Asia, right? So they actually launched Tencent Music. It's like something like Spotify, but simply for all the Chinese consumer, the Hong Kong users, or the Southeast Asia users, all right? I think it's mainly for Chinese songs. And if you go read Tencent's earnings, they're actually doing fantastic, super well, right? They're doing super well. So Tencent's amazing stock, it's an amazing company. It's one of the first few companies that IPO with positive earnings. All right, not many companies IPO with positive earnings, but Tencent is one of them. I think Spotify isn't still actually making as much as how much Tencent is making. But anyway, putting that aside, that's your homework too. Right now we're looking at Tencent over here. You can see that since its IPO, right now it's actually down around approximately $1 since its IPO. And as you can see, the high is over here. So I've been telling my students back then, actually, hey, going to get into Tencent. Some of us got in, and after they ride the wave up, we collected some premiums, we didn't sell, and ride the wave all the way down. After which we ride the wave all the way up here, and it was good because we actually make a lot of money. And we actually down here was a negative territory, so we lose money, right? But when we ride the wave back up again, we actually break even and in fact make some money out of it. So actually very fantastic. It's a good trade and we enjoyed it. All right. So right now Tencent is trading at around $13. All right, it is very cheap already, guys. I'm not talking in terms of PE or PEG perspective. I'm talking in terms of share price perspective, because you guys are looking for cheap stocks, right? So Tencent is an amazing company. Do your homework. You'll find out more about Tencent. It's really just amazing. Now next we have JD. JD is also next on my list, which I think is really cheap. It's the Amazon of China. We do note that there's still an ongoing trade war with with US. So a few couple of more stocks I'm going to share with you guys. Alibaba is there's still trade war going on with China. There is no resolution on the table just at the moment. So do take note. All these companies are doing it with a lot of logistics and global tradings, right? So when we look at JD.com, you can see that currently it's almost hitting its high point already. So you can see that since April has been trending, it's been range bound from this $31. Let's put it as $32. All right, $32 all the way down 26 to $32. All right, it's been range bound at this area. So now my hint to you guys is maybe you can sell out maybe 1 to 2 months out, maybe at $26 as puts. I'm not too sure if there's strike price over there, or you can actually sell call if you're very, very aggressive. You can sell call at $32. All right, but that's if you own JD share. All right, so JD is a company for you to look out. Currently, we can see that the consolidation here is still a bit towards the bullish side. Why? Because first and foremost, it is being supported by all of these three lines: the 12 days exponential moving average, the 50 days exponential moving average, and the 200 days moving average. All right, so it's above all of these three key moving averages that makes it a makes it an upwards trend. Second thing that we will note is that despite this $32 resistance line, we have seen it making higher lows. All right, this is also another component of trending higher. So you want to see higher lows before it goes higher and higher. So in other words, I think JD is actually a pretty good stock. Even if you own at $30, you continue to sell call, lower your break-even price all the way to $6. I think once it starts to rebound there, you'll make a lot of money. All right. Now next we also have ITI, which is a Netflix of China. I think ITI have a lot of potential because its primary focus is on Chinese drama and Chinese show. So ITI actually have it's not really competing with Netflix. It's not really competing with Apple TV. It's not really competing with Disney Plus because it's on its own game itself. China and in Hong Kong and Taiwan, etc. So it's actually a huge market potential that is yet to be tapped on. It's untapped market potential, untapped market. So yeah, I think ITI has strong upside potential. The worst case scenario support line is around $14.50 plus minus around there. So you can look at it. It's quite good. Then also next we have Sina. Sina actually came down a lot. You can see now currently it's a downwards trend all the way down. Now if we were to draw the trend line all the way down, you can see that currently Sina is actually reaching its support lines. Furthermore, right now we can see that Sina haven't had an official strong momentum breakout from these moving averages, so we cannot confirm that it will break out from here. But then if Sina do break out from here, you can expect Sina to go higher and higher and higher. So this is one of the telltale signs whether the company is going to go up if it breaks above this downwards sloping trend line. Okay. Now next we also have Weibo. Weibo is the sister company of Sina. If I'm not wrong, Sina owns Weibo. I'm not too sure which owns which, but I'm also not too sure if Weibo is the Facebook or the Twitter of China. But anyway, you can also see a similar pattern because these two are like sister companies, right? So they trade similarly. You can see currently, we do see that Weibo actually have a stronger momentum compared to Sina. And yeah, basically if I were to choose one of these two stocks, I'll probably choose Weibo instead of Sina. Okay, so after which we also have companies like Baozun, which is the third largest e-commerce shop in China itself. So we have first and foremost Alibaba, then we have JD, and then we have Baozun. Alright, so Baozun is the third one. As you can see, Baozun usually trade faster and higher than JD.com. Reason is because the number of share floats available in the market is different. So that's why you can see why how come Baozun is smaller but then it's able to trade higher. So there's actually a lot of things behind the scene that we don't understand, but you just need to understand the share price currently. So you can see after the recent earnings, Baozun actually came down a lot, also due to because of trade war and everything. But you can see a rebound over here. So I expect maybe Baozun to go up until around $50 or $55 before it starts coming down. Now do take note because of the ongoing trade war, I'm not going to recommend a buy and hold, right? In fact, I won't even be recommending anything. All I'm just saying is like my personal opinions lah. So I'm just so if with that said, I think that if you were to sell put, probably selling at $40 would be quite safe considering the short-term resistance line over here. Okay, after which let's all go to Baidu.com, Baidu Incorporation. So Baidu also have been a downward sloping trend. You can see Baidu's all the way down here. Alright, you see some I actually draw last time some potential support level, which you can see that it was actually trading around here, right? So when it does break down, right, it was not able to break it up again and supported with this exponential 200 days moving average. And then when it trended here, when it break down again, it really just break all the way down. So that's the power of support and resistance line. I want you guys to know how to actually accurately use all this support and resistance line. That's why I'd like to invite you guys to the webinar so you can learn really for free. And when people are charging like thousands of dollars, I'm just going to tell you guys, I'm going to share with you guys all for free. Alright, there's no point charging money for this kind of stuff. If you can make money, then that's good. Probably one day you bring me out for coffee or something like that. Alright, so anyway, Baidu.com, Baidu Incorporation, I think currently it's consolidation phase. Maybe if I own a few shares, I think that would be great. But still, ongoing trade war is also a huge crisis over there. Next, we have Alibaba. Alibaba, surprisingly, a lot of people does not know it, but if you actually read the earnings transcript or earnings report by Alibaba, you will notice that actually Alibaba's international trades and whatever is revenue actually only makes up around 7.7 to 10% of its total revenue. And if you take a look at it further, Southeast Asia takes the huge component, followed by Europe, and then becomes US. So US actually only takes around 2 to 3%, but it's one of the most hated stock because Trump hates China, and with that said, the investors dump whatever Chinese stock they can find. So again, looking at Alibaba, currently it's at its short-term resistance line. Now, if it do break up above this $177, you can expect it to probably go up all the way to $190. All right, so this is before it hits another resistance line over here. All right, so I guess that's pretty much it about this these few Chinese stock that you can potentially look at since the Hong Kong extradition bill actually withdrawn. Chinese stocks are rallying, Hang Seng Index is rallying. So yeah, anyway, I've come to the end of this video. Hope you guys actually pick up some stocks to put in your watch list, and I'll see you in the next episode. Bye bye.